Okay, and so let's have a look at this specific industry. As I said already, internet content information industry. This is based on breakdown which we have in FinViz. FinViz is an analytical platform. It's completely free. There is a paid option there as well, so you can always access there and access this platform and just to do some kind of research or screening yourself. All right. Now, this industry includes quite a lot of companies. Now, when you wake up every morning, you straight away kind of get into this industry, because when you open your smartphone, straight away you start searching like Google or some other search engine, or you checking your emails, or you go into social media, or you listen to certain podcasts, or you watch YouTube videos. You straight away kind of get into internet content or some information. And within this industry, there are a lot of businesses which kind of came from other industries. For example, traditional media companies, okay, which kind of New York Times, now you can watch it online on the website, right? Wall Street Journal. I just gave you screenshots from Wall Street Journal, which is online, right? A lot of book publishers, you can go and read books online, or you can listen like audio version of that, music companies, etc., etc. Now, new media companies like Netflix, Apple, like also Disney Plus, all other these companies which produce new content. It's kind of new completely business which operates only in this specific area. Then web syndicates, where one platform, or aggregators as well, what they do, they get content from different other sources. For example, we use personally quite a lot the company called, the platform which called Seeking Alpha. This platform, what it does, invites different analysts which provide analytical like opinion or the research to the subscribers. So the platform actually itself, I don't know if they have their own analysts or not, but usually what you do there, when you see hundreds and hundreds of analysts, and you can subscribe for any analysts, and you can follow that analyst, and you subscribe for any particular company, for example, Microsoft, and then you see that there are a lot of different analytical articles there. You can read them. So there are a lot of platforms like that, and you can see it like all these different options as well. And social media, another one, is very popular right now. Now, as I said, there are a lot of companies which work in this area, and you probably know that some of them, they're huge, they're multi-billion-dollar companies, and some of them tiny. It's only one person who opened YouTube channel and started creating the content. So, and you probably understand the competition in this area is really, really high. Because if previously, if you want to become a media company and you want to create content, print newspaper or show kind of TV channel, you have to pay a lot of licensing. You have to like invest a lot of money. At the moment, there is nothing. You just need to have a webcam, computer, access to the internet, and that's it. And you can become like a content producer. That's easy it is. Now, and of course, there are different price models as well, like revenue models. Some of these companies, what they do, they create paid content. So in order to get access, you have to pay straight away for that. And there are companies which actually give you it for free. And you, as a user of this content, you pay 0 cents for that. But how the company generates money, they generate money because now you have to watch all these advertisements. Okay, and you know that some companies, they have only one way to get money or another, and some companies, they have multiple ways to get money. For example, if you go to YouTube, so you can watch it completely for free, and YouTube will generate money from the revenue from advertisers. But also, if you're fed up of all these ads, what you can do, you can start paying YouTube. You can subscribe it, I think it's $10, and you get Red YouTube. And after that, you don't see all these ads, right? But YouTube generating money from you now. So there are different sources. Same as our master classes. So we had a paid subscription, but now we opened and you can have accesses for completely free, right? So this is how companies operate. Now, the company which we're going to analyze tonight, it has double revenue. So they provide free content, and when people access to the free content, they kind of see advertisements, and company MOMO, they get money from those advertisers. But also they have a subscription based revenue, so where they get money from the users themselves for getting access to some kind of extra features in their platforms, which allow them to use it in a better way. All right, so, and it's actually pretty good way to do business. Now, the thing is about a lot of platforms, a lot of businesses in this area, that in order to make money, real money in this business, you have to create a quite huge subscription base. So for startups, for small businesses, it's pretty difficult to create income. And if you even look at like biggest companies right now, which you know, it's like Facebook. Facebook was losing money for quite a while. For quite long period of time, he was losing money, and Facebook is completely free platform. At least I don't know what we have to pay for any services in Facebook. So the only way Facebook generates money is through like third parties. So for promotional, like showing you ads and etc. etc. That's how they generate money. Okay. Whereas if you go for LinkedIn, it's another social media which is niche social media, and you can also go for free there. But then they have a subscription base as well, so you can get certain features on LinkedIn when you start paying them money. All right, so this is like that. So it is important to understand. And if you're hearing about new company which is going to grow, yes, there is a lot of potential, but there is a lot of risks as well in the small companies, because it's quite difficult to get through this kind of level where you become profitable. And if the company is not profitable yet, even they have a lot of subscriptions, they have a trouble. Most likely that company is going to be bought by somebody, and then, for example, Twitter on its own, I don't believe that Twitter would survive. Like, at least it was my opinion. So it had to be bought by, because what they're doing, bigger companies, they buy your database, they buy your users, and after that they start introducing new services to those companies. So the way I found this specific company, I actually heard about this company, and but I didn't pay attention then. At the moment, it's quite difficult to find any good company which is undervalued, okay, in the current market situation. So it took me quite a while to discover this specific business. So in any way, after I found it, I decided to check it. So I went to FinViz. As I said already, it doesn't exist in Belgrade. It exists, but at least I cannot see the reports there. So what happens there? I just put in FinViz, in the screener, I put internet content and information. And look, there are 62 companies which are included in that industry based on FinViz division, right? And after that, I added several parameters on. Now, one parameter is the earnings per share growth for the past 5 years. So it means that the company was growing more than 5% in earnings per share every year within the last 5 years. Okay, that's one parameter. And the second fundamental parameter, I put just PE ratio lower than 50. Okay, I didn't put any other parameters because, like fundamental parameters, because after adding optionable and shortable, for me it's very important that company has options, because one of my strategies in the stock market, after buying shares, I also sell covered calls. It's kind of similar to getting rent. If you buy in the property, if you don't know, you buy the property, you hope that the property is going to grow up in price, and that's your strategy, but then you put a tenant in it and you generate monthly rent. So similar story with the shares. So you can buy shares in the hope that the share will go up, but also you can generate some additional income by selling covered calls, so like collecting rent. Right. So that's why for me it's important to have options, because it's like a hedging strategy. So if I see that the price instead of going up stays on the same level or starts going like dropping down, so I always can keep collecting money by selling covered calls. I'm collecting rent. Look what happens. Out of 62 companies, only one company left, which is MOMO. So this is the top screen is before putting all these 4 parameters, only one parameter industry, and after adding another 1 to 3 other 4, so that's what happened. Only one company left. Now I came back and I decided to see, okay, what's happening with other companies. So majority of those companies, P ratio is very, very high. So they are quite expensive right now based on the amount of money you pay for $1 of profit. Majority of them were 25 and higher. And some of them weren't profitable completely. So they were losing money. And some of them, they might not losing money, low PE, but they don't have a growth rate. So they're not growing, they're actually declining in the revenue and earnings over years. Okay, so it's very important. For me, it's important that company is actually growing. Okay, that's what happening in this particular industry. So if you decide to invest in that particular industry, and I know that some guys, they prefer to buy ETFs. I don't know specifically if there is ETF based on that specific industry, but if you consider that, be aware that majority of companies, they are overvalued, overpriced, and a lot of them, they are in loss. They are not making money. So if you buy ETF, industry ETF, so it means that there would be included different type of businesses in that ETF. It's kind of more dangerous than buy just individual company, for example, MOMO. Okay, so that's again my opinion, guys. You have to base your investment decision on your own circumstances. Okay, but be aware of that, right? So that the whole industry is not the perfect industry to put money in right now because it's overpriced. Now, guys, can you put from 0 to 10 how you understand about the general industry? And if all clear, we'll go for already like for the company itself.